So, hello and welcome everybody to the second edition of the Newsec webinar series on the Nordics and Baltic region and the trends we identify. We are thrilled that you are joining us for the next hour to discuss the accelerating trends within the property industry in the Nordic region. And it's great to be able to tell everybody that we are participants throughout Europe, of course, UK, but also the US. So it's fantastic that such a big group has decided to invest time in this webinar. So all welcome. And to your audience, there are also an opportunity to put questions as we go along. There would be a field below on your screen where you can pose your question. It will be picked up by the crew here, and we will see if we can cater those questions. Before I introduce the panel, I just want to give a short backdrop to the conversations that we're going to have today. The property industry has already identified a numerous of trends long before the pandemic struck us. But the spread of the COVID-19 virus has in many ways acted as an accelerator, making trends happen earlier, but also faster. And during this webinar, we will focus on three of those trends and having a conversation around them. Those three are capital allocation and what will change, the emerging interest in regional cities based on migration, immigration, and the last topic will be on public properties, a new growing asset class here in the Nordic space. But however, I first would like to introduce the panel to you all. And I would like to start with Ilija Batljan, who is the Managing Director for SBB. He's also a member of the board, founder of the company, and Ilija is based in Stockholm. Welcome also to Ilkka Tomperi, based in Helsinki. Ilija is the Investment Director and Head of Real Estate Investments of Varma. Welcome, Ilkka. And Jenny, based in Stockholm, Director of Allianz Real Estate within the Nordic region. And also Karolis Adlis, Director within PW Carey's European investment team, and Karolis is based in London. And last but not least, Max Barclay, Head of Newsec Advisory and one of the principal owners of Stronghold Group with Newsec and Niam as main holdings. And Max, you're based in Stockholm. So welcome everybody, welcome to the panel. I guess it's time to dive into the first topic. It's a conversation around the allocation of capital. And for some time now, it has been clear that properties are a safe and long-term investment. And during the last 5 years, the Nordic transaction market has had a very steady volume, around 40 to 50 billion euros annually. And despite the current pandemic, the first half year's figures are arriving and pointing at 16 billion in transaction value, which is just less than 10% on average the last years. So it's fair to say that the investment outlook looks pretty bright for the Nordic region. So to kick off the panel, what I would like to suggest is that we do a round call around the panel, asking you, each of you, the question, from your view, what's attractive in the Nordic and Baltic real estate market on a whole? And it gives you also a opportunity to position yourself, from what angle you are coming, investing into the region. But I will only give you 30 seconds each, and you have to explain this on 10,000 feet, to make this happen. So please, I would like to first invite Jenny Lindholm to kick off this round table on what's attractive in the Nordic and Baltic region from your perspective. So welcome, Jenny.
Thank you, Henrik. I would say from an Allianz view that we view the Nordic just as before the COVID pandemic as a very attractive region for real estate investments, out of the same reason that you mentioned, Henrik. It's a wealthy region, high degree of education. We have a strong population growth and a stable economy. But what I also see as something that I think makes us ahead of the rest of Europe is that we were already quite far ahead in the working from home environment and also using our offices in a very flexible way. And I hope this will help us and be an advantage in going over to this new normal with a more flexible working environment and hold up the office as still a very attractive investment segment.
Move over to Karolis. From your perspective, where you sit, what's your...
We definitely like the Nordics a lot. We've been present in the region for almost 20 years. We have, I think, close to 1 billion euros of investments there. It's a very robust economy, very resilient economy, very liquid market that we like, and also very transparent. And that really helps to invest in the region and provides a lot of liquidity. So as an investor, of course, you have a lot of competition, but you got a lot of capital there. But at the same time, there's a lot of product as well that gives you opportunities.
So thank you very much. Thank you. I move over to Ilkka. From your perspective, what's your take?
Yes, good morning. I think that the Nordics, bit as described earlier, I mean, it is an interesting area. It's, of course, our home market, so my views are in a way a bit biased because we are going to be heavily exposed to this region anyways, whatever happens. But of course, it allows us to kind of put Nordics in the perspective, and whenever we make new investment decisions, we look, of course, where the deals are most attractive. And in that comparison, I mean, I think that the Nordics really stands out quite well still. And of course, if you look into the transaction volumes, I think that, for example, in the case of Finland, and I guess that's partly relevant also in other Nordic markets, the first quarter was quite strong actually, and has helped to keep up the first half-year results on such a high level. Second quarter was actually quite quiet, but I think that again, especially locally, a lot of transactions took place, and I think that also demonstrated that there is liquidity. So we don't necessarily need a foreign investor in these countries to make transactions, but it didn't prohibit some big transactions to take place where, say, Germans were acquiring office assets and sort of things.
Thank you very much. Thank you for your perspectives. And let me move over to Ilija. What's your perspective on investing in the Nordics?
The Nordics is probably the best place in Europe to invest right now. So we will see even more foreign investments going forward, and we will also see broader interest to invest not only in the bigger cities, but also across the region.
Thank you very much. So that was great. Now we have a nice panorama of different perspective on investing in the Nordics. And let us dive into the question around what will happen around the allocation of capital towards the sector in the region. So Max, to you, in the latest Newsec property outlook, you predicted that 20% of all capital available will be allocated to real estate by 2030. What's your view? What's behind that, and how will it impact?
Well, I mean, good morning, Henrik. Good to see you again. I think that, first of all, it's not a new trend. The allocations has increased over the last few. And this is a continuous trend that we see, but it's increasing in pace. And I think it's very clear that the alternatives are very few because of the low interest situation that we have, and that most people think that we will have for a long future. So the allocations will increase. 20% by 2030 is of course a guess, but we will see what will happen. But I think that another perspective of this is that most of that capital is pension capital and institutional capital that means that they will actually keep it. So I'm kind of raising a finger saying that in 2030 a lot of the stock will be stuck with investors that have no intention to sell, which could of course inflict the transaction volumes.
Thank you. That's interesting, and it's a great segue actually to Jenny and to Ilkka, who actually operate from such platforms, if I might put it that way. So maybe Jenny, what's your perspective on it?
Well, at Allianz we are a long-term investor, and just as Max is saying, if we acquire well-located modern assets within the Nordic capitals, we will most likely like to hold them for a long time. So yes, we will contribute to that hold up in the sector. But still, I also believe in what Max is saying, that institutions like us will probably allocate more capital towards real estate going forward. So we will see that trend increase.
And Ilkka?
Yeah, I can fully support that. I mean, our allocation towards real estate has been a little bit below what our peer group has had actually. So just under 10%. And now we obviously have picked up a little bit of that. We have targets which are above that. And again, as a multi-asset investor, I mean, the world and the opportunities, I mean, they are quite scarce if you think about the risk return prospects of anything. So, I mean, shares have had a major run. Fixed income type of investments deliver what they deliver. Infrastructure is quite pricey and so on. We have had hedge funds in a big role in our portfolio, but the reality is, of course, that a lot of hedge fund type of returns is also actually generated through the equity markets or the sort of corporate fixed income high yield type of situations. So technically, adding more of those is not necessarily the way to go, which again quite naturally feeds into real estate. I think again, real estate is something that we need. So in a way, you can't really avoid having housing or offices or warehouses. I mean, these are needed going forward. So it's a big part. So I think that's about. Of course, if the economic outlook gets very poor, so the low interest rates are not really making it as glamorous on its own. So that's something to bear in mind as well.
Yes, absolutely. Karolis, please.
Yeah, I wanted to share a bit of my insight, I guess. I think WP Carey is pretty much the definition of a long-term investor. You know, we are a sale-leaseback specialist. You know, we do a sale-leaseback, acquire the asset and keep it during the duration of the lease. And, you know, like you mentioned, you know, we contribute as well to sort of this lack of properties on the market because we never really sell. But at the same time, I think, especially in the Nordics, there are a lot of owner-occupiers who are reluctant to sell because they're very much attached emotionally to the real estate. And I think there needs to be an educational process as well to encourage businesses to do sell-leasebacks, to sort of get rid of the real estate, get the full value of that capital and sort of invest into the business. And at the same time, I think COVID and the pandemic will sort of increase that trend a little bit, you know, helping companies, sort of motivating them to do sell-leasebacks, to get extra cash, to sort of help their businesses. Just an observation.
That's a good observation, and it actually leads me to one of the reflections I had preparing for this seminar, which is, in a way, it could seem a little bit ridiculous, but I mean, will there be a shortage of real estate in the future? I mean, access to real estate, Max?
I can maybe put some numbers on it. It's very hard to get historic numbers on this, but we have tried to look at, for example, the Swedish market, how much of the total stock that is in that definition stuck with investors that would hold it for a long time. And our estimate is that we're talking about around 20% of the total market today. We have no historical figures on that. Mm-hmm. But if you look at Stockholm CBD, it's above 50%. And I think the trend is quite clear. And you know, I would say, Henrik, that there is a shortage of real estate already today, but the shortage will be even more present within the core segments where these money preferably invest.
And that leads me to another question in this respect. That is, if you have a thin deal flow, if you like, or will not that lead your money elsewhere? I mean, if not regionally or geographically. I mean, Ilkka, you're predominantly Nordic, but what would you think about that?
No, I mean, we've been investing a lot and increasing in the biggest European markets during the past 5-6 years. And I mean, the reason is, of course, the volume that we are also seeking. And I mean, historically, of course, local institutional investors have played too significant role in the local markets. And again, that's not good either. So for the sake of opportunities, we need to explore, and of course that means Germany, France, and UK are very high on our radar. But of course, I mean, Sweden compared to Finland is also quite a sizable and liquid market, and I think there are a lot of differences in the real estate markets in these two countries as well.
Mm-hmm. And from an Allianz perspective, how do you look? I mean, you're really a natural international investor, you know.
No, from an Allianz perspective, of course, the world is our investment market, and the Nordics is just a very small part of that, but still an important part in terms of diversification and allocation. So we will have the same interest for the Nordics going forward, but I think the trends that we see is also on a global scale that Max is discussing, the shortage, especially of core and prime office products. And I believe that this pandemic will also accelerate the need of these products. What we see is that well-located modern office products will be the best office products to own. They will survive the best, since we have looked at density within our research, and the more dense the city is, the higher the need we think is for the offices. So our conclusion is that as long as you have well-located modern office premises that are flexible, they will be also in high need going forward. So I think these products will see even higher competition and scarcity.
Yes. Yes, Karolis, please.
I think one trend that I'm seeing, since the beginning of the pandemic is that, and in the Nordics and in other parts of Europe as well, is that, while before the pandemic, capital was divided among different property types, was logistics, office, retail, other things. And what the pandemic did, it seems that all the capital that was put in retail, all the capital that was put in offices is suddenly now allocated to logistics. Mm-hmm. It seems like there's a lot more money now chasing a lot smaller product, a lot of less product. And that definitely drives the prices and increases competition. The other thing, there are a lot of good things about the Nordics, but the caveat is that these are very wealthy economies, and there's a lot of local capital, and that more local capital definitely drives the prices up for the real estate, which you don't see in certain other European markets.
No, and that's actually a very important observation, and I guess for the global investor, at some point you reach a price point where you have to sell in a way, and if prices go up too much, which leads you to leave the region maybe. Ilija, from your perspective, being you're acquiring, if I may put it very simply, how do you look on the prospects? Did we lose Ilija?
No. It's I'm here, and I do think there is a lot of opportunity in the market. However, you have to work much harder as before. So I agree with Max. It is already a very competitive market in the Nordics, but it should be even more competitive. Those are probably the most safe countries in the world, and they should attract more capital.
Good. I think that's a great conclusion and a great segue actually to move into our next segment, our next question to debate, and. It's the second topic of today is the revival of the regional cities. That's one way of putting it. And just to give the backdrop here, connected to the trends that, office space become less necessary in the old traditional sense, and working from home normalized as an effect of COVID-19, primarily right now. We can see the increased interest, in working and even moving to regional cities and even the countryside, as Max alluded to earlier. And but there are also statistics that show that over the past decades, the international immigration has driven population growth in the capital cities. But at the same time, there has been for some time already a positive net internal migration into smaller cities from the metropolitan areas in the Nordic. And that has accelerated according to the statistics. So the question here would be, to kick off this conversation, would be what effects will it have on the regions, and what will we see happen in the CBD areas of the main cities? It's a broad question, I know, but we will drill down as we go along. And I thought, to start to start with Karolis, actually, from your, if I may put it that way, more opportunistic standpoint, investing. Does it matter for you? Is it important, the trend?
I mean, as an investor, we always been investing in regional cities. We are very much opportunistic investor. We chase good credits and good yields, and we not necessarily target, or we can't often afford to buy offices in CBD markets. And also, you rarely find a long lease with an office. So for the assets that we pursue, logistics centers, light industrial sites, it's often regional cities or R&D sites that are often located near universities, which tend to be in regional cities. One observation I can say is, when we did our Baltic transaction in 2017, when we acquired a portfolio of retail assets in the region, it contained, assets in capital cities and regional towns. And when I was speaking with local investors, they were surprised, why would you ever buy anything in a regional city? And our observation from underwriting is that, for example, for a retail asset, if you have an asset that is well competitively located, it typically performs better than assets in capital cities because it has no competition, it's the only store in that town, and everyone goes and shops there. So there are a lot of reasons to go into regional cities, and we've always been there. And I think, like you say, COVID is definitely sort of encouraging that trend, and I think we'll see more of that coming for sure.
Cool, thank you. And I thought we will move over to the institutional side here, and maybe if I may, move over to you, Jenny. Given what you said before around how you view, the metropolitan areas and the capital cities, in this respect, do you think this trend will affect your view on where to go?
Well, speaking as a core investor, mostly in offices within the Nordic capitals, I think we will stay in the Nordic capitals when it comes to offices, at least for now. Out of the background I gave you before, we think that high-density cities are better off adjusting to the new normal use of offices. Still, of course, you could apply this to smaller cities as well, and I think the takeaway there would be that second-tier business parks may do worse in this adjustment that we will see. Mm-hmm. And we believe that sticking to well-located modern office premises will keep us keep a high resilience within our portfolio. Still, I believe what Karolis said is true for logistics. The logistic market has seen much higher interest since of COVID, and that is also spurring the regional cities for sure. And of course, it's also positive for multifamily investments that the regional cities are doing.
Ilkka, and
it might be possible for us as well to go down to the second and third cities within Sweden for office investments as soon as we have a bit of a better portfolio in the capital cities first.
Okay, I see. That's good. Thank you. And Ilkka, from your standpoint, have you invested in regional cities already, or is it something you are contemplating?
To us, actually, I would say Tampere outside Helsinki region is the only really kind of regional city that is investable in my mind. We are also having a local office there, so we have a couple of asset managers and so on. So we feel that provides the kind of volume that we need for both commercial properties, offices, and also residential. It's good. We do have some retail assets and sort of things, hypermarkets and other types of investments also in other cities that have, say, north of 100,000 inhabitants. So kind of Jyväskylä, Vaasa, and Turku, and residential we have in addition to these also in Lahti, which is kind of a commuter city close to Helsinki. But I must admit that if I look at the trends again from a Finnish perspective, so that the regional cities would see any real growth out of this situation. I mean, temporarily, if we look at the second quarter movement of people between different types of cities, so there is clearly a difference to the past 5 years average during the second quarter in the Helsinki metropolitan area. So we had kind of more or less very close to zero type of a number of people moving from other municipalities to those that are in Helsinki region. And that was a big change. There has been actually little less movement to other cities around 100,000 people or so. There was a significant leap in a way in other municipalities, and these are really the small municipalities. But again, I mean, if it's 500 people that decided to move to these small municipalities, so that's nothing, and it's only 1 quarter that I'm now comparing to the average of the past 5 years, 1 quarter. The only kind of area where I believe that there might be a little bit more growth is actually the kind of municipalities around the bigger cities, so Helsinki and Tampere. And there I think that it's quite natural that the trend as now was initiated this spring might continue. And it means mostly, again, housing, so that people with the more flexible ways of working think again that, hey, commuting like 3 quarters or an hour to the office is actually not that bad if I only need to do it once or twice a week. And I think that this is probably where the biggest change is. So again, it may mean that there is need for some flexible offices or co-working type of things located in a little bit more suburban areas than we are used to. And this is again driven by the fact that when people relocate there, they don't still necessarily want to work from home and sort of things. But I don't think that it's making any bigger change. So the only area where I see it is that people are maybe accepting longer commute to their work because they don't need to go there.
Thank you very much. And I you know, it's always good to reflect and compare, isn't it? So may I jump to Karolis before I go to Ilija? From a London perspective, do you see the similar sort of trends, or do you have the similar conversations?
Absolutely. I mean, the residential market obviously is not my field of expertise, but if you read the news alone, you see that the sort of the resi prices in the suburban areas of London are shooting up, while the prices in the city center does not have such support. And it seems like a lot of people now, because you need to work from home, or because you might have an option to work from home long term if you want to, you know, they need more rooms. They need, you know, more space in the house, because you need a room for your bedroom, you need a room for your kids, and you need to have a room to work. And you can't have that in a flat because they're just too expensive. So people tend to move outside in the outskirts of London with the idea of, you know, commuting fewer times to the office, like it was mentioned earlier. And I do think that might increase the trend for sure for these, like you mentioned, you know, flexi working spaces where you could come into the office, you know, a couple times a week, commute a couple times to your normal office and do a couple of days, you know, from home. So definitely seeing that trend for sure if you just read the news. Yeah.
So Ilija, I mean, you're primarily specifically a regional investor, aren't you? Or am I wrong?
You are completely wrong, because the 75% of our portfolio is in the larger cities. However, we do like regional cities.
So that leads me to the drill down question: are there specific segments you will look for? You know, you look towards, you know, that will be more attractive, you know, in the regional cities. And let's start with the cities that are close to the metropolitan areas. You know, what would be the typical segments that will have a future, and maybe where there also will be new constructions or development happen, you know, to provide more product to the market. Maybe I put that to Max first, and then we can go around the table.
Well, I think there is a lot of moving parts here, and I think that Ilkka and Karolis made a very good point that is kind of describing how we are changing as humans and how we are, you know, more focusing on quality of life. And my answer to your question, you know, the regional cities close to the capitals or the larger cities, I think all segments will be very interesting, because I think that they have a lot to gain. You know, if we go into the headquarters once a week or twice a week, our perspective on commuting will totally change. In Sweden, we say that, you know, 45 minutes to an hour is okay, but that will be, you know, 2 hours instead, because you only do it once or twice a week. So that will really change the scope of the cities closer to Stockholm, Gothenburg, and Malmö. So I would say that most of the segments, but Karolis pointed out residential, logistics, office hubs, that will be a good alternative to go into the headquarters in the capital city every day.
One segment we haven't mentioned at all is hospitality. Do you have any statistics on that or any view on that, Max? I mean, hotels and...
No, interesting enough, and when you are in a situation like the COVID-19, it's very hard to see what is beyond that. We kind of think to draw the trends and say that this is the way it's going to be forever, and that's the only thing I'm sure of that won't be the case. But it looks like the capital cities are struck harder when it comes to these segments. And that the regional cities are gaining there because in Stockholm there is not a good occupancy within the hotels, but if you look at the regional cities and especially the ones that are giving something else than only an office market, but entertainment and things like this, the hotels have been full since the pandemic and continue to have a very good business running there.
Thank you. So I'll put it... Yes, Karolis, please.
I think, again, just an observation, speaking with, agents all over Europe, what it seems has happened during COVID is that hotels in city centers, which primarily serve the business travelers, have suffered more because people now can do Zoom calls, can do, Teams meetings, and don't have to really fly for a meeting, to another city or another country. While hotels in sort of more like resort areas are going to be fine because people still want to go on holiday, still want to travel. So I think you have to differentiate, hospitality into sort of business hospitality and, leisure hospitality. And I think there are definitely different trends in these sectors.
Very good. Thank you very much. We have a question here from one of the audiences. It's as an international investor, what is demanded in order to start investing in regional cities? Is local knowledge needed, and what about the local competition? Someone feel prepared to answer that? Karolis, yes?
For us, the way we look at regional cities is, we're a credit investor. We primarily focus on the credit on the company that's going to pay us rent. So that's where, the majority of our underwriting goes. And then we look at the criticality of the location, how well the location serves the tenant. So in our underwriting, we want to make sure that location is good for the tenant primarily, and that's sort of the angle of our underwriting. And of course, you do your other underwriting to make sure that residual values and alternative uses are there as well. But primarily, you want to make sure that asset and that location works for the tenant.
And Max?
Yeah, I would like to refer back to the first question, the balance in supply and demand. I think that, probably doesn't go for Varma and Allianz, but for slightly more opportunistic players, we're challenging the definition of core. And I think that, especially the cities close to the capitals will be also defined as core. So we're changing this the definition in respect to that there is a lack of product.
Yeah. So in a way.
And can I just
please
can I just add here, because this is very important what Max is saying, because a lot of people are losing a large amount of money right now because don't understanding exactly this, because Karolis should not make any money if people understand how market has moved, and particularly if you compare, for example, Sweden as the largest, most liquid market in the Nordic, difference towards Germany is enormous. It is enormous, and this gap has to be closed, because there is no reason why shabby offices in Germany will be valued at below 3% net yield, and you can buy elderly care homes in Sweden at 375, because that is like 25% price difference, or if you relate to Swedish rent-regulated residentials. So this gap has to be closed and will close very, very fast.
Thank you. That was a very good comment, because that was actually one of the questions that just came in. You know, what's the difference between the market, and why is there a difference? And I think you're spot on there, Ilija. Thank you for that comment, Max.
Yeah, I totally agree with Ilija, and I think that, you know, the window is closing fast, and that's one of the reasons why Ilija is moving so fast and have been doing for the last years. But I think that also, you know, you need to understand that the complexity increases when you leave the larger cities. So you really need to learn your lesson, and you really need to understand the local markets, because there's a huge difference between Stockholm and Gothenburg, which are the two largest cities. But if you add the complexity of adding a place like Växjö or Borås or something like that, you know, good cities, but the complexity increases, and you need to understand your local market.
Thank you very much. Anyone who would like to make another comment before we move on to the third segment we have to discuss? I think we're good to go. So let's move over to something totally different, or maybe it's not. We have to explore that now in our conversation. And I will introduce to the audience who might not be so familiar with the concept of public properties, as we have chosen to call it. It's a fairly new and, in my opinion, a broad concept. It can be defined, if you like, as a properties used for tax-financed operations, or specifically adapted for community service, or other special purposes, hospitals, nursing homes, schools, courthouse, police stations, and more. And I'm probably also totally wrong here, Ilija, but you know that this is the best I can do in defining it. But the important thing here is, for the conversation, is that the investment appetite linked to this type of real estate is very hot and growing significantly in the Nordic space. So what we thought would be the first question here to actually discuss and debate is whether this is something unique for the Nordics. Is this something unique? Do we see similar trends or things happening elsewhere in the markets outside the Nordics? And follow up on that, really, you know, is a qualifying question would be, is it really correct to call it a segment or an asset class, or what is it, and how should we sort of look at the phenomena? So it's obvious that the question goes first to you, Ilija, of course, you know, being in the front runner in this context. So please, Ilija, comment on that.
Thanks for that, and you are almost always right, Mr. Chairman. It's just sometimes you need some help, but in this case you are describing it in a very good way, and I do think that is a segment, and that is probably the most safe segment in the world, particularly in the Nordics, and because at the end of the day, you have exposure to the government-backed income, and that is one of the things that we in the Nordics have not been good to describe. I mean. We do pay large taxes, but with those large taxes, there are some good things, and one of the good things is that there are the properties that can be compared to government bonds, and particularly properties for the public use or a part of it what we are focusing on and calling for social infrastructure, like elderly care homes, special apartments for people with disabilities, schools and preschools, and that kind of basic services that in the Nordics are publicly or tax financed.
Thank you. So may I just ask again to be helpful to me? So if you compare this to something you see elsewhere in other markets, what do you see?
I see, for example, there are a few other players, but this is mainly from the beginning started as investing in hospitals. So you have ICAD Santé in I hope that my pronunciation is right in France. You have Assura in UK. And on top of that, you have also players that, for example, provide apartments for military. You have Annington Homes in UK. You have in Germany, Deutsche Wohnen has relatively large part in their portfolio, not only Berlin, but relatively large part in elderly care homes, and they even own an operator of elderly care homes. So this is in a historic context a new segment and a new focus, but we just saw a few days ago the large social sustainability bonds from ICAD Santé and Assura that has been well received by the market. So the knowledge about the market is increasing also outside of the Nordics.
Thank you for that. Max, you waved.
Yeah, I think that, if it's a segment or not, everybody is allowed to cut the cake in whatever way they want. And if you cut it one way and a lot of people agree that that's a good way of cutting it, then I guess it's a segment. And I think that is what has happened when it comes to public properties. And I think that, there are many things that is important when you run a real estate business. One of the most important is to understand the cash flow, to understand the tenants, and what drives them and what their needs are. And in this segment, it's both very foreseeable. It's not a question of how many kids that will start school in 2023. We already know that. It's not a question of how many elderly people we will have in 2025. We already know that. So, it's a foreseeable market. It's publicly financed. Which is one of the good things about high taxes, that we have a social system taking care of this. So in many ways it's very foreseeable and predictable, and that makes it comparable with a bond, like Ilija is saying. And I think that this is a segment that will grow quickly, has grown quickly, and will continue to do so.
So I was thinking about the WP Carey, focusing a lot on the operation as such, the underlying sort of operation and their credit, so to speak. How have you sort of viewed this from a strategical standpoint beyond your sort of current business model?
We, as Max said, there are many ways to cut the cake. We never sort of put it as a separate segment of the market. We more look at it as a type of real estate. We do own a number of public real estate properties, be it government offices in the UK or government offices in Spain. We have also looked at a bunch of public properties in the Nordics, and for a credit investor, for a long income investor, that's the holy grail. But they tend to be very expensive because if your tenant eventually is the municipality or part of the government or the government, that income is essentially a government bond, very secure, and is priced as such more often than not, and therefore more often than not is unaffordable to us. But yeah, definitely keen to look at these things, and we look at them and underwrite them whenever we can. But I don't think they come to market that often. I wish there were more of them in the market. I wish I could see more of these products for sure.
That's an interesting comment, because the segments, I think a few years back, it represented 1% of the transaction volume in the Nordics, and 2019 I'm told it was 14% of the transaction volume. And of course, a segment like this, needs to build on liquidity and the ability to sort of enter and exit. So one can then question sort of whether if there will be product enough out there in the market. Ilija, how do you see that?
Yeah, that is, but also as Max introduced today's discussion, which I do think it's very important for us as real estate investors also to see that probably the first time ever we are in position to be seen as how to say scarce market, not only in this space. I am sometimes as investors amazed at what kind of shit people are throwing money instead of looking at properties that are delivering cash flow and will probably going to deliver also extra value. So it is a big shortage in this market, but I see the shortage across the real estate. Of course, exemption for retail, which has to be something other because of the big structural change. But the shortage is absolutely there. We have been working very hard to push for more properties, to talk direct to municipalities. Now we are actually also succeeding to move some municipalities in Finland to start to see opportunity to sell, and we are right now also pushing in Norway and continuing to working hard in Sweden. So I hope that also the new needs for financing after Corona crisis will also get more municipalities to if they want to invest in their schools and their basic services to sell, to do leasebacks, and that will be good for the market, and that is also good for the taxpayer, because we are always shown to our municipalities that we are more efficient property management that their own teams.
Thanks, and this is a great segue to you, Ilkka. You know we discussed this between ourselves when we spoke.
Yeah. So we obviously, this is to us, this is the category called other. So clearly, it's quite a small part of the portfolio. A number of years ago, we obviously at Varma wanted to be a bit more active in this segment of senior housing and nursing homes. We had a portfolio of some maybe 10-15 assets on our own, but we realized that since the average lot size is quite small still, it's a specialist area. Obviously, our people are not specialists really within this area. So we actually teamed up with another pension fund who also had a handful of these properties and actually created a fund. So we both sold our assets there, and then we committed a little bit of extra money so that they were able to build up a little bit further. Obviously, that was then subsequently sold to another investor. We repeated that, and it worked well. And I think that to me it was good because, of course, I'm contacted frequently about willingness to invest into these. So we decided that we actually do this through these platforms, because for us, individual, these type of assets are quite small in lot size, so it doesn't really turn the needle. But if it's a portfolio, it's actually quite interesting. It's a nice diversifier. I mean, the performance clearly, like in residential, is not correlated. So actually, the way how I've started looking into our portfolio as well is that I'm splitting it into the GDP-related properties and to the demographics properties. And the demographics clearly are driven by the other trend, whilst the GDP is then the one that is then making the volatility in retail or offices. So that's quite nice. In addition to this sector, which we are covering in a way through the fund model at the moment, we are investing into schools. And that is, of course, quite attractive because there again, we can sign a 15, 20-year lease with the municipality or some kind of quasi-public organization. So I think that that's quite nice, steady. It's versus the risk, it's yielding nicely. And one reason why I like these special properties is, of course, that as long as the location is good and I can see that the residual value is not going to be a problem. The tenants are not moving around because, always say that reason why I hate offices, even if we have a third of our portfolio in offices, is that it's a bulk product. I mean, there are good quality offices all around, and for any tenant who's considering to move, they always have options. And I mean, if you can stick to an asset class where there is less competition, so why shouldn't you do that? And that's of course the case for a nursing home. So the operator who already runs a unit somewhere, I mean, why should they build a new nursing home next door? I mean, they've done it in some places, but still, same thing for a school. So, I mean, it's a special purpose building or a jail. So, again, a police station, whatever. So, I think that that's the great thing with these things, so that the tenants tend to be stickier. But I think that what is critical there, and that goes across all these asset classes within alternatives or public properties, is really the residual value issue. So, what if? And again, I mean, we have now the demographics that drive the senior housing theme. But in 20, 30 years' time, the big kind of vintages of people are not anymore there. And obviously, since people are moving into the larger cities, so for example, I am a bit nervous about some of the senior housing facilities that have been created in some of the smaller municipalities where you see clearly a negative trend in a population. So I think that you need to be careful there as an investor as well. And so even there, I rather stick to places where I see more growth in the longer term.
Thank
or
you.
At least stability.
I can, Ilkka, I can help you to get rid of your others. So,
Fantastic.
Brilliant.
Fabulous. That's great. And just a yes or no question to you, Jenny. Has this discussion, changed your appetite for this segment?
Well, as a core investor, I think we will stick to mainly offices and logistics. But I do agree with everything that especially Ilkka said. To us, we are also invested in these segments, but through our indirect fund partners in the Nordics, which we are very happy with. And that is a good way for us to also get access to these segments.
Yeah. That's great. Thank you very much. So it's soon time to close, actually. And before we do, we thought we will pose a few quick questions to you. So the idea here is to polish your crystal ball a little bit and think about the future outlook, say 5 years from now or something like that. And the thing runs like this, you raise your hand and you present your quick answers. And it's no tricky questions. It's pretty straightforward. So I think we will just start by putting the first question out there. Which two segments will be the biggest in 5 years? Who will take that? In the Nordics. Max.
Well, I will refer back to Jenny for exactly what she said. It will be offices and it will be residential.
Any counter view on that? Yes, Karolis?
Well, I think one trend we're definitely seeing is logistics. I don't want to sort of keep singing the same song, but we definitely see a massive increase in demand, both from operators and both from investors, to have exposure to the logistics segment.
So we have a second question, and it is actually also one of the questions that more or less came in here from the audience. Will regional cities become larger investment destinations than capital cities 2025? Who will take that? Ilkka and Jenny.
No.
No. Jenny?
I agree with Ilkka, no.
No. And no contrary view on that. That's great.
I'm sorry.
That's fine. That's fine. Here's another one. Will the Nordic and Baltic be the most popular investment region in Europe in 5 years? No one wants to take on that challenge. It's a crystal ball, No one will hold you accountable. Max?
Well, I think that the interest in the Nordic and Baltics has increased a lot, and we are one of the major markets in Europe. Unfortunately, we are 0.5% of the world's population, so I will answer no. But given the size of the countries and the population, it's one of the most attractive regions in the world, just as Ilija said earlier.
That's great. And we have time for yet another question from the audience. And the question goes like that. All of you are talking about the trend that more people will go to cities and business parks, etc., outside the capital cities. What will then happen to offices and higher vacancies and lower market values, from the places where they live?
I think that is a very good question, and clearly, I mean, we are obviously observing the very empty city centers in many capitals of Europe at the moment or elsewhere. And of course, I mean, if people opt for working from home or other locations several days a week, that means that there will be less people in city centers, and unless the city centers are not attractive destinations for these people to kind of visit, we will see, of course, that the services are moving where the people are. Services have been moving into the city centers because people were there. If people are not there, services will be elsewhere. Mm-hmm. It's sad, but it's true.
Jenny?
Yeah, I still believe, I think we all have established that work is an activity, not a place. Still, I believe the office serves as a very important place to meet, to spur ideas and creativity. And to us, the city centers, the CBDs of the Nordic capitals and the European capitals are still the destinations where people would like to go. I think we have to remember that we are just people, and we will go back to our habits. That's my belief.
Great. I can just add here, because this is very important what Jenny is saying, and I can assure you, offices, you will not work at home in the way you have been working during Corona. This is external shock. But particularly in my company, I want you to be in office. Mm. There is your working space. There are your working colleagues. There is our culture. When I don't want you to work in office, then I can hire you as a consultant. So this is a big buzz that will go away. However, the problem is on the other side, and where there is a lot of money allocated, and this is retail, and retail is going to be crushed. If I look at e-commerce trends, and that is back to Ilkka's issue before. Who will pay for that, and how will you pay for that, and how will you make it attractive, and so on and so on. So that may affect the attractivity of offices, and that can be a problem for more than owners of retails.
Thank you very much. I think it's time to close, and I think we should all give the panel a big round of applause, although nobody will hear it, but you did a great job. It was very interesting, and also thank you to the audience. We have had well over 400 people listening in. As I said in the beginning, pan-European, even US, and pan-Nordic. And I think, my final word will just be stay tuned for the next session, which will take place in November. And we will shortly come back with more information. So thank you, everybody, for a good job, and have a nice day.
Thank you.
Thank you.
Thank you.